Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is the 31st of March. It's the last day of March of 2021. What is it? Today's a Wednesday. Where has this year gone, folks? Again, it's a fragmented week. We've got Friday, the market's closed, which means anytime, and I want to talk a little bit about this, because we've talked about this during our session yesterday, and a lot of people are asking me, Roger, why does the market feel so odd? Why is the liquidity so low? Folks, anytime you have a day off during the week, it doesn't matter what it is, half day, Monday, Wednesday, short day, it doesn't matter what holiday. Anytime the week is not a complete 5 trading day, 8-hour a day from 9:30 to 4:15 in the afternoon. Whenever it's not like that, you have a fragmented week. In this case, we have Friday off because we have a Good Friday on Friday. Makes sense. So this week is a holiday week. Whenever you have a week, a day off, or any period of the week off, the week will feel fragmented because large hedge fund managers will look for any excuse to go out and play golf and go to the Hamptons and do fun stuff. Can you blame them? So again, it's whenever you have a week that's not complete, you'll notice the market's a little bit out of whack, a little bit out of its rotation. It feels a little odd. That's normal. That's very, very normal. That's how the market should be anytime we have a fragmented week. So if that's what you're feeling, if that's what the trades feel like to you, if the market seems a little bit more choppy than usual, doesn't have a lot of follow through, that's not unusual because it's a fragmented week. Now, we don't have a lot of news today. We have pending home sales, which I don't think are going to be that exciting. We do have the petroleum report, which will be interesting in light of the Suez Canal lockdown, but that's not going to really reflect much of it. The bottom line is we still have a lot of supply, but it's getting lower and lower. So things are looking better, but I don't think this report's going to have a major impact. Tomorrow, on the other hand, we've got jobless claims, and I'm expecting below 700,000. Jobless claims, manufacturing, construction. So tomorrow we're going to get a really good idea of how manufacturing is coming along and if prices are increasing on the manufacturing level and on the spending level. So that's going to be tomorrow. Going to be a big report. The biggest report, obviously, is going to be the jobless claims, as I've mentioned, and that's going to tell us if the number is going to be 680. It's going to be good if it's 680. It'll be finally we're moving below the 700,000. The 4-week moving average is still in the 700,000 range, but I'm hoping, fingers, toes, everything is crossed, literally, that we'll be below 700. If that's the case, we're going to be bouncing back, and that's going to be telling me that people are starting to go back to work, and these vaccines are actually having a meaningful impact on our daily lives. So that's going to be tomorrow, and then employment data on Friday, not as impactful because the market's going to be closed, so it'll have a full impact. The market will have a full weekend to assimilate that data in its price. Now, let's talk about futures. Futures are a little up. Yesterday, we're down 100. Today, we're up 100 on the NASDAQ. We're being really, really choppy. As you could see here, this is the 50-day moving average. Let me turn this into a different color, actually, so it'll be easier for you guys to see it. How about red or orange? There we go. So that's the 50-day moving average. As you could see here, we've been trading way below the 50-day moving average, which means large cap technology stocks and large cap tech stocks are choppy. That's right, choppy. And it's having some, not too much, but it's having somewhat of an impact on the S&P 500. But for this, the S&P 500 would be much higher, but it's already above the 50-day moving average, which is telling us that this congestion, this downside pressure is very isolated, which is a good thing, because if you look at the Dow Jones, you will see that, look at this thing, it's almost back at new highs. So the culprit is definitely the QQQ, which is below the 50-day moving average, and smaller stocks, the Russell 2000, which makes sense because the Russell 2000 also has a lot of tech and it has a lot of stocks that are exposed to China. And China and US are starting to get into a little bit of friction. So keep your eye out for the Russell 2000 right now and for the NASDAQ 100. And keep in mind, Both the Russell and the Nasdaq had the biggest runs over the last several months. So it's not that unusual for them to see slight cool off in their pressure. Now, let's talk about global economy, and then I'll give you guys a couple of hot stocks to look out for. So data is pointing to a strong economic recovery in China, which is very important because a lot of these Russell stocks are what's causing the Russell 2000 stocks. A lot of this is China, pressure from China. A lot of Chinese companies are in the Russell 2000. So that's going to impact that. A survey released Wednesday showed that China's factory activity rebounded in March from a 3-month slowdown as exports rose. That's big, 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 big. That's going to impact the Russell. Chinese manufacturing has recovered to above pre-pandemic level. Folks, that's huge, huge, huge. Investors are awaiting details for President Joe Biden's proposal for spending perhaps even more than $3 trillion on the infrastructure and other measures to help the economy and environment. Remember, construction, basic materials, industrial stocks. That's what I've been talking about nonstop. Most professional investors remain optimistic that the broader market is going to recover. Stronger economy thanks to COVID vaccinations and massive spending by the U.S. government. Massive is an understatement. Should help boost profits for many companies this year, particularly those like banks, energy producers, and industrial companies. And I couldn't agree with that more, as you will see in a minute. Investors have been shifting money away from companies like Amazon and Netflix, the FANG stocks, which benefited from the lockdown, now moving to airlines, automakers, and others that are poised to benefit from a broader reopening. I could not have said it better myself. Now, if you look at the bond market, you will see that it is already moving down. And I warned you that this was going to happen. Notice we have a little pullback, and then we come down again. We have a little pullback, a little reprieve, and we come down again. I think we're going to go lower, and I think that's going to put more pressure on the Nasdaq. And the time we will see the Nasdaq survive and thrive is during earnings, when we find out that these FANG stocks have been killing it under the cloak of darkness. I'm getting a little dramatic here. No, but under the cloak of just kind of being under the radar, and they're doing better than expected. But we're not going to find that out till after earnings. Meanwhile, yield on the interest rates is going higher, which is putting more pressure on those tech stocks. But remember what my report said. Investors have been shifting money away from companies like Amazon, Netflix, basically large cap tech, that have benefited during the lockdown, and they're moving into airlines, automakers, others that are poised to benefit from reopening, like industrial, energy, banks, basic materials. So let's talk about some of those stocks. How about transports? Avery Dennison. This is not a transport, it's basic materials. Let's see here. They make materials. They convert paper products, containers. They're a leader in sensitive labels. Now, I told you a few months back that this stock is going to rally. It's up 84% over the last year. It's a stock that I've talked about quite a bit, and right now it's near all-time highs. Now, I like this congestion, and it doesn't look to be too interest rate sensitive. Techs are, unfortunately. So this is a value stock. I love the fact that it's near all-time highs. I love the fact that it's congesting, and I love these buy levels right now. Didn't even hit the 50-day moving average when the market was selling off. So Avery Dennison, ticker symbol AVY, definitely something to look at right now. Next one. Oh, look at this. Stock that's near swing highs. Look at that. Let's see, 3-year high, 5-year high, 10-year high. Look at that. It's making all-time highs. What kind of a company is this? Well, it's transports. Remember that report that said industrial, energy products, automakers benefit from broader reopening? Well, how about a transport stock? That's definitely improving based on the reopening, and very similar to AVY. See, we had a congestion here, and then we go up. We had a congestion here, and now we're breaking higher. I don't know about you, but this to me looks like an all-time high. So it's not very interest rates sensitive, which means if interest rates go higher, this stock may go higher because higher rates imply more opening up, more broader economy, faster growth, and transports tend to go up when that happens. So if you could see here, longer term, this stock is breaking above a multi-year high. I think this was all-time highs here. Look at this. This is a nice little flat top breakout after congesting for, let's see here, for about a month. I like it. I like this breakout right now. So ticker symbol WERN, and this is definitely in the sector, industrial, basic material, transports. Next, we've got car sales. People want to go out now. They don't want to stay in. They're buying cars. Again, multi-year high. Look at that. 1 year, 2 year, 3 year, 5 year, 10 year. Looks like an all-time high, folks. People are buying cars, and I like this flat congestion. I like the fact that it made an all-time high after congesting for a good long time. That's what I like. Horizontal, vertical, horizontal, vertical. This stock looks like it's going up. Last but not least, that's KMX. Skechers. Skechers is making multi-month highs. Is it a multi-year high? No. But 2019, it looks like we're near a 2-year high, and look at what happened during that February breakdown. We're way past that level. I like the stock quite a bit. Again, moving slightly higher, all-time high from a congestion. Is it an all-time high? No, it's not an all-time high. But it is almost a 6-year high. If we break above this level right here, excuse me, sorry about that, the 44.65 level, but I like this stock, and I think we're going to go higher. So if you want safety, wait for it to break 44.65, and then the next level up is going to be 55. But I like Skechers right now. And again, it's a retail stock, but it's a specific retail stock. Shoes, people are going out. They're buying new shoes. They're looking to go out. They're looking to go back to normality. And Skechers is one of the biggest and most popular shoe company, especially for kids. People love buying Skechers for kids. So we got SKX, KMX, WERN, and AVY. And you know what? The best part about this video, you can always rewatch it to get those ticker symbols, right? Folks, before you go, you guessed it, I've got something big for you. I bet you didn't know this, but there's a little known glitch in the market that causes certain stocks to skyrocket. And we've seen this glitch pay out double, triple, even quadruple digit gains in a week's time. Can you imagine making quadruple digit gains in a week's time? Wall Street legend, Forbes contributor Adam Sarhan, he's revealing the secret behind this market glitch that has made millionaires out of everyday traders in just a handful of months. In other words, you really cannot, and I mean you cannot afford to miss this. Make sure to click on the link below so you can learn this strategy. The same strategy that's uncovered money-making opportunities on a monthly basis. I mean, it's made millionaires out of everyday traders in just a handful of months. You really cannot afford to miss this. Follow the link below and find out, learn everything you can about the strategy and Adam Sarhan. And make sure to like this video if you're watching on YouTube, and subscribe to this channel on YouTube, and stay ahead of the market by being the first to be notified when we post new videos. And check out SKX, KMX, WERN, and AVY, and have a great day. Bye, folks.